Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Good morning, Emily. Good morning, Lawrence.
Good morning.
Getting a bit of a rebound in the markets right now.
Yeah.
Let's have a look. Right now, the CoinDesk Bitcoin price XBX index is at $38,459. Bitcoin is up about 4.4% over the past 24 hours. The CoinDesk Ether price ETX index is at 27.91. ETH is also rising. Taking a look at the DFX, CoinDesk's DeFi index right now is at 314. DeFi is racing up about 8% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, looking at our top story of the day, it's coming out of India, actually. They're implementing a 30% tax on any income from the transfer of cryptocurrencies. That's a first for the nation. The Indian Finance Ministry is adding that the country will issue a digital rupee sometime in 2022 or 23, and that's the first time the Indian government has given an actual timeline for a launch of a central bank digital currency. Emily, any surprises out of this? What was your initial reaction?
Sorry, some sirens outside. Yeah, I think we're still trying to figure out exactly what it means. So I've seen two different takes on this. One is that it's a good thing because India has threatened a crypto ban before. So, people might not like taxes, but at least it's an acknowledgement that crypto isn't going anywhere. So it's working with crypto. But then there are others who say, well, 30%, that's kind of high. So I'm actually very curious to hear what our guest has to say about this.
Any impacts in the markets you're watching, Lawrence?
If it is any impact at all, which I don't think in this particular case it has, because I think, generally it was a wait and see attitude with what India is going to do for a lot of reasons. But we've definitely seen a rebound in prices. And I'm going to say that it's more buyers than sellers. And really is more buyers than sellers for the time being. I mean, look, we've had a lot of selling over the past.
We've had a fire sale in crypto over the past couple of days.
Yeah, people found a discount. I mean, there are a lot of reasons to not buy right now, but that doesn't seem to be happening at the moment. And there are a couple of conspiracy theories one can have about that, but I'm not going to entertain those at the moment.
All right, well, let's dive further into this India story with our next guest.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So joining us now to discuss India's new crypto tax rules is CoinDesk reporter Amitoj Singh in New Delhi. Hello there, Amitoj. Thanks for joining us. So you wrote an article for CoinDesk. India edges toward crypto legislation with 30% tax, announces digital rupee launch. What were some of your key findings?
Well, it's interesting. We did struggle, or rather grapple with just framing that headline, because one aspect to these big developments in this budget speech by the finance minister, the biggest day in the year of when it comes to finance and in crypto for now, is the fact that you're trying to just get a sense of whether they are actually edging towards legalizing or not. Or they are saying, well, we're going to take our time in figuring this out, wait for global consensus, national consensus, just figure out everything that's in between the lines. And in the meantime, if anyone else is making money out of it, we should make money out of it too. So let's just tax them. And let's tax them the most that we can actually tax them, which is 30%. That's the highest slab. Anyone earning more than 12 lakh rupees per year is also taxed like that. So they've done that. When it comes to actually just getting a sense of how they're going to frame it, and my ex-colleague, Sunil Prabhu of India's one of the best networks, NDTV, Sunil Prabhu was at the press conference. He asked a question to the finance minister and said, hey, 1 second, you're taxing it, but you've not regulated it. And she returned and said that we've circulated a paper, inputs are coming in, public stakeholders are coming in, so regulation goes through that process. I don't wait till regulation comes into place before taxing people who earn profits.
Thanks so much for coming on. It's great to have you on this big story. So I guess the question is, how likely is any of this going to happen? Because as we've seen with India before, there's been a lot of announcements and bills. And I mean, is this something that's really going to happen, or is this just something that's now just like up for discussion?
No, this is written in stone now. The financial budget is what becomes the finance bill. So it becomes, in effect, law. Now, is this a crypto law? No, it's a retrofit law which changes the central bank's rules on how they function. So it's basically added to that. What that means is that there will be a tax on any income that you can make on crypto as a retail investor or otherwise. And also, additionally, the aspect of that CBDC, or as the finance minister called it, the digital rupee. The news about that is interesting because so far they've been saying that they're going to have a pilot project. They're going to certainly come up with one retail CBDC and wholesale CBDC, but they've said it very categorically this time from the finance ministry and not from the central bank that we are coming up with one, and it's going to come this year. That was the big takeaway.
Yeah, I mean, I was kind of surprised to see that because I didn't think India was going to move that fast with the digital rupee. What do you think is motivating them to accelerate? Do you think China could be part of it? You know, China is planning to sort of like showcase its digital currency to the world in the upcoming Olympics, or is there some other reason that's pushing them to do this faster than expected?
You know, it's difficult to say. You're not getting a lot from the government and the inner circles of that working group that is working on the draft policy. You're not getting much out of them. So you're not really understanding whether it's because they generally want to make sure that they have this industry under their thumb and under their watchful eyes, or is it because there's a geopolitical, change out there happening that they have to be aware of and they don't want to be left behind in this situation. So it could definitely be China. And there have been several who've actually said to me, in fact, one source, and we reported this earlier, this source is one of the senior members within the RBI infrastructure, had basically said at the time that, yes, China is a factor. But it may be a factor for one institution in the financial spectrum of India, not another. So that's where it gets interesting.
So before it seemed that India may have actually banned crypto trading altogether and to make way potentially for this CBDC, this digital rupee. But now this seems to be a compromise in that, okay, well, now we're just going to tax you. So do you think this is a money grab or a statement on crypto?
It's a bit of both. The burgeoning crypto ecosystem in India has made sure that they couldn't ban it. But just to think about it in the way in which they framed the law, which they've already said they're going to kind of tweak, they've said that they're going to ban all cryptocurrencies. And they may make exceptions to promote the underlying technology of blockchain. But as one industry expert who wished to not be named after this budget was announced said to me, he said very clearly that, one second, you're telling me you're going to tax retail investors 30%, but at the same time, you want to promote the technology of blockchain. How is that going to happen? People may just run away from crypto and go back to the equity market. So it's very interesting. They're certainly in a place where there's so many competing priorities. Remember, there's an election coming up in just a few days. 5 states, including the most populous, the most important state election in the world's largest democracy. They don't want to tinker too much. This has been a safe budget, and crypto also has been a safe, a take by them. Just the tax and the announcement of the digital rupee.
So with this tax, now it's going to be, you said it's set in stone. So it's part of the overall budget, right? So if that's what's going to get passed, this will get passed with it. What will they do to actually enforce it? In other words, do the exchanges have anything in place that would allow them to tell the state or to tell the federal government that, okay, these are the people who owe taxes, et cetera? Or is it just sort of like, hoping that people are honest on their taxes?
No, that's a very interesting question. Look, I spoke to several members of the industry or the crypto ecosystem after the budget was announced, and I got mixed reactions. One said it's good. I don't care if they've actually taxed us 30%. It's good now because it's kind of a legitimizing of crypto in the country, which we've been thirsting for. The other said, wait, hello. It's good, but it's too high, and the fear is that it could, result in retail investors just moving away from crypto as completely. But how this will be implemented is something they still have to get to, because the finer details of the budget and what's written in the rule is something they have to interpret, check with their lawyers. So they're coming back around on that. Just to give you a background on this, we've done a story, an investigative story, an insight story on what was basically inspections by agencies that monitor tax returns given by, for example, crypto exchanges. And if they are short, they, in a sense, land up at their office and say, hey, you owe us this much. And that can look bad. And that had actually happened with a lot of these exchanges. And we've done a story on that. So there is a mechanism that they themselves, the exchanges, have put in place. And there is a mechanism to monitor them that is already in place from the government side. So that, I think, is just going to be needing a certain amount of streamlining and nothing much more.
Just could you help us put into perspective how big 30% taxes really are? Because, 30% tax on every transaction, that seems like that would be quite a lot in the Indian context, just because my understanding is that India has like a lot of really small retail traders who trade like Shiba Inu. And usually the way taxes work is that, at least in the US, there's like income brackets, right? But this is 30% across the board. I mean, was that considered high in India? I'm just trying to get a sense of like the perspective here.
It's the highest. That's the tax slab over 12 lakh. And you're right. It's incremental for people who have a different salary take homes. But what they have done is that they believe that if you are investing in crypto, then you're kind of a person who's maybe well off. And therefore they've said, okay, let's go with the highest tax slab. How much is 30%? Is an interesting question, because in India, for those who are investing in crypto, are already open to the idea of, let's say, a larger risk than they would have taken with the equity market. And therefore, they're also looking for more take home. It's a gamble both ways. So they're okay with that kind of a risk. And if they are okay with that, then what's happening out here is that the government is saying, well, they are taking the risk. We're going to charge them the highest tax slab. And it's still, the jury is still out on whether that's going to impact these crypto traders or not. It could be a lot, but it could also be a situation where they still go ahead and use this as a legitimization. And therefore, the industry, just from the ground up, more retail investors join the bandwagon, because there's kind of like a semi-regulation that's happened, that the ban won't come. So that may just help the industry actually flourish.
So, I mean, looking at it from a broader perspective now, we're stepping back, and you said that the industry is kind of happy that these sort of things are legitimized, if you will. Do you think overall the industry in India is happy with the finance minister? I mean, obviously no one's ever happy about taxation, but are they willing to suffer a little bit, if you will, just because this proposal came out and all the positive things said about CBDCs, et cetera, the digital rupee? Do you think that overall this is a positive development, a negative development, or mixed?
Yeah. The take home is interesting. Look, you got to read what is said by the crypto exchanges to you after such an announcement. What they say to you is, well, it looks good. At least we've been legitimized. But they're looking at us and speaking to the media, knowing what they say is going to be translated and reflected. But are they also worried that this is basically the government effectively saying, okay, one, you are making money, so you got to give us money. And two, we're also coming up with our competitor, which is the digital rupee, that would probably affect you later. So in a sense, they are happy because the biggest takeaway is that they can now go ahead and say, well, if they're taxing us, then they've legitimized us. So come on, join the bandwagon. Let's do ads. Let's get the biggest film stars, Bollywood superstars, cricketers, and continue with those ads. And help the industry continue to grow. It also helps the blockchain industry, which is legitimized. And on the other hand, you have the government saying, well, hello, we have a bill coming up. That bill may just ban you and only have the Reserve Bank or the central bank's digital rupee that function in maybe one or two exchanges. So it's going to be interesting to see.
Mm-hmm. Well, certainly a compromise. Amitoj, thank you so much for keeping on top of this developing story. Great insights and Have a great day. We're looking forward to seeing more of your reporting. That's Amitoj Singh, CoinDesk reporter in New Delhi. All right, our next story, 2021 was the year of NFTs. Many experts predicted 2022 will be the year of DAOs, decentralized autonomous organizations. 1 month in, and we've already got our first controversy, Wonderland DAO. Joining us now is Ian Lee, co-founder of Syndicate, a Web3 tool that helps people pool their capital to invest. Hi, Ian. Thanks for joining us. So we have serial scammer and convicted felon Michael Petrin, who has changed his name twice, co-founded a fraudulent crypto exchange, Quadriga CX in Canada, was revealed to be the co-founder and treasurer of Wonderland DAO, a multi-billion-dollar crypto project. The community voted to kick him out, but less certain is whether the project will continue. The other co-founder, Danielle Sestigali, has made a lot of confusing statements on whether the project will continue or not, but that seems very characteristic of DAOs. A lot of people, a lot of opinions, and it can get messy. What's your impression?
Well, look, I don't know much about the Wonderland controversy beyond the headlines. But I think that, look, this is a part of the growing process for crypto in general and DAOs specifically. I mean, I don't think that this is particularly unique in many ways. I mean, I've been in the crypto space for almost a decade full time, and we've seen things like this happen occasionally. So look, I think that, this stuff happens, but the reality is that most of the builders and most of the projects in the space, I believe, are trying to do the right thing for people and these communities. And so this is a part of the maturation process. And I think that, we've seen this movie before, and the ecosystem will grow stronger as a result of it.
Well, what do the promise of DAOs hold, and how do you hope to tap into that with Syndicate, project you're working on?
Yeah, absolutely. So, the evolution of DAOs has gone through multiple phases, starting with the DAO in 2016. And then there was this phase, I would say, in the years after that, where people were looking at DAOs as sort of this generalized framework and technology. I think we're now entering into a third phase of DAOs where DAOs are going to be more application specific and in a way verticalized as opposed to more horizontal. And so I think that what is really interesting about DAO technology is that it is, unlike other crypto technologies, not only a financial technology, but also a social technology. So what we were looking at here is a technology that not only coordinates financial capital, but also human capital on the internet natively, seamlessly together. And the applications of that, in my opinion, are profound in the sense that it can not only revolutionize a number of different industries, including investing, like the one that we're focused on, but also a number of other areas, including the future of work and organizations and just generally lots of other spaces of the economy. So I think that DAOs are, it is going to be the year of DAOs. And I think that even the next few years it'll likely be one of the most important technologies to emerge from Web3 and crypto in general.
Ian, you said we've seen this movie play out before. What clues are you using to basically decide whether or not a DAO is structurally sound or unsound? I mean, what clues are you seeing in the marketplace or before investing that you think investors should look at and say, okay, this is a problem, a consistent problem that we've seen time and time again, such as this horrible scandal right now with time?
Well, one thing that I would offer is to suggest that actually there's a spectrum of decentralization with respect to DAOs. And the second thing that I would say is that there are different archetypes and types of DAOs. So not all DAOs are the same. And I think that what the world needs to start to understand, or the industry needs to start to better understand, is the different archetypes and types of DAOs and the different risk profiles associated with those, right? Because I think that in the same way that like people thought all cryptos were the same, or all blockchains are the same, or all NFTs are the same, the reality is that not all DAOs are the same. And one of the key axes that I think is important is the degree of decentralization and the degree of trustlessness. So, for example, there are DAOs that, sort of position themselves as completely trustless and very decentralized. But behind the scenes, right, when you look at the actual operations and whatnot, they are actually more centralized than people think or expect. And that creates misalignment in terms of expectations, and obviously like a disconnect in terms of the perceived versus actual risk. There are other DAOs, though, on the opposite end of the spectrum, where there's actually a high degree of social trust. In particular, these are groups of friends oftentimes that are using DAO technology to mainly streamline efficiency of operations, right? So actually Syndicate sort of sits on that end of the spectrum, at least today, where most of the DAOs that are being utilized with our technology are primarily groups of friends that have known each other for many, many years, and they're using this technology to coordinate more efficiently together. And I think that has a very different risk profile, right? Because inherently everyone knows each other and they trust each other.
So how are you filtering? My understanding is that you're filtering based on whether or not somebody's, let's say, an accredited investor. How do you filter within what you do at Syndicate? Like, what kind of things are you putting in place that would keep not only certain people in, but certain people out who might, let's say, not be trustworthy?
Yeah, so for our particular space, right, the first tool that we've launched is this thing called Web3 investment clubs. And actually, investment clubs have existed for hundreds of years. They just existed in community centers or restaurants where people in their local town would get together and sort of share ideas about different investments, whether they're stocks or real estate or other things. And they would invest together as friends and as a community, right? Now, that model, which has existed legally for hundreds of years, hasn't been modernized for the internet, and certainly hasn't been modernized for Web3, where a lot of these new assets like tokens and NFTs and other things now live, right? So we basically took that model, turned that into a DAO, powered that with DAO technology, and made that native to Web3. And so what does that mean? Well, what this tool does is it allows virtually anyone to start a investing club as a DAO on Syndicate, on Ethereum, at least today, with their group of friends. And what's interesting about investment clubs, and this, you can read actually on the SEC's website, because they have a page dedicated to it, is that investment clubs can have non-accredited members. In fact, they can be completely self-organized, provided that they meet certain rules to maintain their status as an investment club. So what we've done is we've designed at all levels, at the protocol level, at the tool level, as well as even partnering and teaming up with various companies like Dula on the fintech side. And we've teamed up with Latham Watkins on the legal side to provide investment clubs with the appropriate legal tools to protect them, their members, and the DAO. Because we think that, honestly, for DAOs to go mainstream as a technology space, it's necessary. It's necessary for the tools to exist, but not sufficient, in the sense that, if these DAOs kind of don't, I guess, they end up breaking certain rules or either advertently or inadvertently, then that will, impede DAO technology's ability to succeed long term. And so we want to do the right thing for them and their members.
All right, Ian, very fascinating. Thank you so much for joining us. That was Syndicate co-founder Ian Lee. Coming up, Crypto Markets Update with ETF and asset manager WisdomTree Investments.
I was posting art on Twitter. I had a physical painting I did, and I made a little website. A few months pass, and I get an email. I love your art. I'm interested in digital assets. Do you know what NFTs are? And I read that, and I was like, what?
And trying to explain to people that we can have these collectible digital assets that you can own. And then the digital assets, like game assets, is also a growing sector.
Remember the ape thing? I was like, oh my God, I need to get in.
Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, seeing a lot of green candles. Checking in on Bitcoin, the CoinDesk Bitcoin price XTX index is at $38,970. Bitcoin shooting up about 4.4%. The CoinDesk Ether price ETX index at 2805. ETH also rising 9.5% over the past 24 hours. The DFX CoinDesk DeFi index is at 315. DeFi making an advance of about 8% for the day. Joining us now to discuss the crypto markets is Will Peck, head of digital assets at WisdomTree. Welcome, Will, to the show. So what's your short-term outlook for Bitcoin and the crypto markets?
I don't really have too much of a short-term outlook, trying to focus on the long term. You know, we help our clients figure out how Bitcoin or other certain crypto assets could fit in a portfolio, and, well-diversified portfolios. So no short-term outlook, but, I think it makes sense in the long term for long-term investors.
What is your long-term target for, the next 6 months to end of year?
No price targets for me, but we certainly, it's going to remain volatile. We're trying to help our clients understand that, but I think it makes sense for people to allocate as part of a long-term portfolio. So, no price targets for me, but I remain optimistic and bullish long-term.
Will, you're getting involved in the DeFi ETF space. Trying to build an ETF in DeFi. Do you think that institutional interest has been shaken over the past few days and weeks, given the scandals that we've seen?
I think we're seeing a lot of interesting developments in terms of, we call it responsible DeFi. Other people may say institutional DeFi. So one of the announcements we just made at our earnings call on Friday was with regard to what we're calling WisdomTree Prime. It's a new digital wallet that allows users to hold digital assets, buy, hold, save, spend digital assets. And for us, we use that term broadly. So that could certainly be crypto, but as well as, what people might call tokenized assets or blockchain-enabled funds, securities over the long term. So we think this is a really exciting development for WisdomTree. It opens up a new direct-to-client channel for us and gets at this idea about more institutional players trying to take advantage of DeFi concepts for more than just, crypto assets today. So there's been a lot of exciting developments. Aave Arc, for example, is one that we've been tracking closely that have really shown how this can start to happen for people.
So you say you look at basically the long-term prospects for crypto. When you're looking at over the long term, what are some of the main factors in your view that tend to have the most impact on crypto's price? Is it, for example, regulation or something else or institutional involvement? Like, what are some of the main factors that you pay attention to?
I think it's an adoption game. You're looking at, there are 6 billion people in the world. How many people have a Bitcoin wallet today or use Bitcoin in some way? And just the thought that that's going to continue to grow over time. So, I think a lot of people have been focused on inflation hedges recently, and then that narrative kind of changed for a bit. It all depends on what time frame you look at. But long term, if you're talking about continued adoption of an asset class and a technology, you're going to think that you'd see continued growth in it going forward. And obviously, with something like Bitcoin, with a cap supply, increased demand is going to lead to increased prices. So I think that's the biggest driver of things in the long term. Obviously, that kind of affects, I think, blue chip assets or things that are going to stay for a longer term more than something that could go up and that can go down or whatever. But I think that's the biggest long-term driver, and we're trying to help our clients understand that.
Well, Will, congratulations on this new digital wallet and embarking on responsible DeFi. Appreciate you coming on the show. That was WisdomTree head of digital assets, Will Peck. Coming up, checking in on CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
You can NFT anything that is inspiring to you.
This space has changed my life.
And then I started looking under the hood. I like the potential and the freedom that the NFT world gives you.
I want to be with the forerunners that are pushing the change to how not just musicians, but how creatives are going to sustain themselves.
In the non-fungible joking show, if this ends up being huge, it would change the world.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk, The State of crypto newsletter. Good morning, Nick. So, we've been trying to get experts to talk about DM and the subsequent fallout that we're seeing, but nobody wants to talk. So, Nick, would love to hear your thoughts on the death of DM.
Good night, sweet prince. It's kind of crazy. If you took a poll of like anyone who's been following DM for the last 2.5 years, I don't think anyone would have expected it to, really ever launch. It just never got over the connection it had with Facebook in the early days. There's literally 2.5 years of DM or Libra trying to say, oh yeah, we have nothing to do with Facebook. They're a part of us, but so is every other company that's a part of us. We're not the same thing. And they just never were able to overcome that. And, now they're shutting down, but it's, one of those projects where even though it never launched, I think it's probably got the most significant, regulatory impact of any single project in the last couple of years. And we're going to be seeing, that fallout probably for quite a while, really.
Yeah, would you say that the whole initiative to regulate stablecoins came about because of DM even being discussed? Do you think that lit the fire under the proverbial tuchus of the Treasury Department and the Fed to say, hey, we got to get something going here?
Yeah, absolutely. I mean, if you think back, the first time the President's Working Group for Financial Markets mentioned stablecoins was at the end of 2019. It actually might have been it's 2019, I'm pretty sure. It wasn't, they just came out, they were talking about stablecoins forever and ever. They started in saying, we're looking at stablecoins specifically because of how, this one particular project may or may not be looking at this. And it's not just the US. We're talking about, regulators around the world have been talking about stablecoins primarily through the lens of what the original, basket-backed Libra stablecoin vision was. They're not talking about, if we have a single stablecoin backed by a single, asset that's held in reserve at a, in a trusted financial institution. They're talking about, okay, well, if we have this, stablecoin that's backed by a basket of different assets, which are also currencies in their own right, then, here's the concerns we have. And even though now I think you could draw some comparisons to stablecoins that are backed by baskets of securities, it's still a bit different in that there is an existing regulatory structure that would address, security baskets. The SEC in particular in the US and different countries have different approaches for securities. So that's not going to be as big a concern. Even now, though, a lot of what we're talking about is through the lens of the original basket stablecoin version.
Yeah. Nick, what does shutting down look like? Did they amass assets that they have to start selling? For a project that hasn't never launched, what does shutting down mean exactly? And what does it say about, the difficulty in, they wanted to do it the right way. There are stable coins out there. We've got Tether, we've got USDC that didn't go through this scrutiny. Yet they tried, and it didn't work out so well for them when they tried to do it the right way with regulators.
Yeah, so taking that second one first, it is really interesting in that a lot of the projects that have sought regulatory permission to launch and have tried to abide by, whatever relevant regulatory structures are in place are not doing as well as those projects that just launched first and asked permission later. So, within stablecoins, you're absolutely right. DM, in his statement shutting down or announcing the shutdown yesterday, DM CEO Stuart Levy said that they have been engaged with regulators since the beginning. And, as you noted, there's tons of stablecoins out there now that just launched that didn't, bother with trying to get permission from different regulators. And even beyond the stablecoin, there's a lot of projects that try to abide by SEC reporting standards or, what have you, that are either not doing so well or are on the cusp of shutting down because, there's just no interest or no adoption, or for whatever reason, they can't really get people to buy into their projects. So as far as DM itself goes, in the statement last night, CEO Levy said that they have sold their assets to Silvergate Bank. It's going to be $50 million in cash, $132 million in Class A shares. And what Silvergate gets is the technology, the infrastructure, and whatever IP DM created. And apparently, according to a Silvergate statement, they've been operating in what they called a pre-launch phase. So presumably there's more than just some code and some vaporware. But what exactly that is, we're not really sure. And DM is going to now spend the next couple of weeks just kind of spinning off its subsidiaries and I guess just formally shutting down, saying, yeah, we're this is it, we're done.
All right, so we might see a stable coin out of Silvergate soon. Nick, thank you so much for joining us. Appreciate your insights. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Let's take a look at our tweet of the day. Crypto Twitter has a new addition. Arizona State Senator Wendy Rogers tweeting, "My bill, SB 1128, exempts virtual currency from property taxes." She also says it allows for paying taxes, fines, and other payments to the government in Bitcoin, Litecoin, Ethereum, Bitcoin Cash, and others. Finally, State Senator Rogers saying that last year, "I wanted to make Arizona the most crypto-friendly state in the nation. I was serious." Hashtag BTC, hashtag Bitcoin. So a lot of laser eyes are following this state senator from Arizona. Very interesting developments. See what happens with that legislation going through their state.
Yeah, but you'd have to live in Arizona.
Have to live in Arizona. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewiton. I'm your host, Christine Lee. Meantime, check out The Hash at noon Eastern, as well as All About Bitcoin. And I am so excited about NFT All-Stars making its debut at 4 p.m. Eastern. Be sure to check it out. You're watching CoinDesk TV.